A US bank study found that 82% of small businesses fail due to poor cash flow management. What's the difference between the ones that succeed and the ones that fail? Having the right financial team, not just financial people. If you're running a business doing $2 to $20 million in revenue, you've probably wrestled with the question, what should my financial team actually look like? Hey everyone, I'm Jeff from ProSeer. We provide outsourced accounting and fractional CFO services to businesses in this revenue range. And we've seen entrepreneurs who do it themselves and miss massive opportunities, and then others who hire in-house teams too early and burn through a bunch of cash. Now there's another way, which we recommend, which is a 5-person financial team structure that gives you strategic planning, tax optimization, legal protection, and wealth building for less than the cost of 2 full-time employees. If this topic is hitting home, please like and make sure you subscribe because we're breaking down topics and strategies like this every week. By the end of this video, you'll know the exact 5 roles you'll need and when to bring them on and how much to pay. But first, let me tell you about Sarah. Sarah owns a manufacturing business doing $6 million in revenue. She's paying $62,000 for a full-time bookkeeper and $8,000 for a CPA to do her taxes once a year. But here's the problem. Her bookkeeper recorded transactions but couldn't advise her on whether to buy or lease equipment. Her CPA always filed taxes on time, but never called in July to say, here are the strategies that could save you $40,000 come December 31st. No one helped her think about cash flow 3 months out, and no one reviewed the contracts before she signed them. No one planned her personal wealth separately from the business. She had people doing tasks, but she didn't have anyone working towards outcomes. So let me show you what a proper financial team looks like. The framework for businesses doing $2 to $20 million we recommend are 5 specific roles. The first role is an outsourced accounting team. Bookkeeping, month-end close, financial statements. Depending on the level of service, an outsourced accounting team can cost around $30,000 to $60,000 annually versus a similar cost for an in-house bookkeeper. But with a team, you get backup coverage and a lot more expertise because they're working with many clients. Next, we recommend a proactive tax team. Not just a CPA that files your taxes once a year, but someone that calls you 3 to 4 times a year with ideas, or that you have access to go through different strategies and planning to make sure you're not paying more than you need to. Next, a fractional CFO. This gives you strategic financial leadership for big decisions like capital raises or margin improvement, along with cash flow forecasting. Fractional CFOs can run from $3,000 to $15,000 a month versus a full-time hire of $250,000 to $500,000 a year in-house. Next, we recommend every business have a corporate attorney. This is someone that reviews contracts, makes sure your partnerships are structured correctly, and your operating agreements are in place. This helps protect you and the business from running into trouble. Role 5 is a financial advisor. This is someone that plans your wealth separately from the business. We're talking retirement, investments, and even exit strategy. If you're like most entrepreneurs, the majority of your wealth can be tied up in the business. So this is someone outside the business that can help you diversify and make sure you don't lose everything you built. Now, most entrepreneurs think, I can't afford 5 people. But when it's structured right, this entire team costs less than 2 full-time employees. Here's how. First, let's start with outsourcing your accounting. This is where most businesses waste money. If you hire one in-house bookkeeper at $55,000, what happens when they're on vacation or when they quit? Or when they hit a complex transaction they don't understand? With an outsourced accounting team, you get full coverage of data entry, monthly close, accuracy review, plus a senior person that you can call with any questions. Good outsourced accounting teams are delivering financials by the 15th of every month, with the best ones delivering them within a week of month end. If you're getting your financials on the 25th of every month, you're making decisions based on old data. When we showed Sarah, her bookkeeper had miscategorized expenses for 2 years, her margins looked different than she thought. She'd been making pricing decisions based on bad information. But clean books are just the foundation. The next role is where Sarah found the biggest savings, a proactive tax team. This role can have some of the most immediate ROI. So here's what you need to understand. When it comes to tax compliance, your accountant will file your return, calculate what you owe, submit to the IRS. That's all reactive. When you have a tax advisor, they call you in July and say, based on your current profitability, here are 4 strategies to implement before December 31st to legally reduce your tax bill. That's proactive. Some things that top tax advisors are covering on regular calls with their clients are maximizing retirement contributions, company vehicle strategies for vehicle purchases already planned, adjusting your S-Corp strategy, purchasing additional equipment or property, and allocating annual expenses and partnership interests to make sure there's no surprises at year end. A proactive tax advisor doesn't wait until April 10th when all those things are too late. Next, let's talk about a fractional CFO. Your accounting team tells you what happened. Your CFO will tell you what to do next. A fractional CFO will help you make strategic decisions. Should you hire 3 people or outsource? Can you afford that next location? How do you improve gross margin by 5 percentage points? Or what's cash flow going to look like in a few months? These services can run $5,000 to $15,000 versus a full-time hire of $250,000 to $500,000. And most businesses running at $2 to $20 million in revenue don't need someone in-house full-time. You need someone strategic spending 10 to 20 hours per month on high-level decisions. Sarah's fractional CFO restructured her pricing, improving margins by 4%. And on $6 million, that's $240,000 of additional profit. At a $60,000 a year cost, that's a 4 times return on the price paid to the fractional CFO. Next, let's talk about your attorney and your financial advisor. Your business attorney should be called before you sign big contracts, before you bring on partners, before disputes arise. We've seen examples of one $2,500 legal review that saved a client from a partnership agreement that would have cost them half their business. And when it comes to a financial advisor, this is someone who thinks about you personally, not just your business. What should you do with the excess cash that you have in your business if you want to pull it out? When should you start funding your retirement? How do you plan an exit from your business to actually realize all of the benefits of your hard work? Many entrepreneurs wake up at 55 years old with a valuable business, but no personal wealth outside it. That can be a problem. Now, these 5 roles can work together as your financial team. So here's how to build the team. First, start with outsourcing your accounting. Find a firm delivering your financials by the 15th of every month with a budget of $3,000 to $5,000 a month. Then add a proactive tax advisor. Ask CPA firms, do you do proactive planning or just compliance? You want both. Budget for this can be $5,000 to $20,000 a year depending on your complexity, outside of the compliance filing costs. Next, bring in a fractional CFO. At $2 million in revenue, start with 10 hours per month at around $3,000 to $5,000 a month. Next, build a relationship with a business attorney for contract review and entity work. Keep them involved as your business grows. Lastly, find a financial advisor who works with business owners and understands separating business from personal wealth. So let's go full circle with Sarah. She was paying around $70,000 annually for her bookkeeper and CPA with minimal strategic value. Then she restructured her team. She outsourced her accounting. She brought on a proactive tax advisor, a fractional CFO, around a cost of $100,000 a year. Here are her results. The tax savings from proactive planning were around $52,000. The margin improvement from CFO pricing changes were around $240,000. And the time she saved from not managing her in-house bookkeeper was about 5 hours per week. She spent $28,000 more and got $292,000 back. That's a 10x return. More importantly, she finally had a team thinking 3 steps ahead instead of just recording history. So what's your next step? Audit your current financial team. Do you have all 5 roles? If not, start with accounting. Get your foundation solid, then add roles as you grow. Also, watch this next video where we break down 5 financial metrics every business owner should track weekly. It's how you actually use those clean financials that your new team is delivering. If this video saved you from an expensive mistake, hit subscribe. We drop strategies like this every week to help you build a more profitable and less stressful business. Talk to you soon.